Hey, what's going on, everyone? Today's March 16, 2023. We're going to talk about Credit Suisse. Too big to fail. Credit Suisse yesterday dropped like 28%, bringing in more concerns about the financial stability of the global economy. Now, what could really cause this to pop right now? A lot of people has tried to equate what has happened to these mid-sized regional banks here in America as to why Credit Suisse is going through their issues now. Now, if you look at a couple of articles and try to glue the pieces together, it may be a different reason as to why Credit Suisse is on the chopping blocks requesting funds from the federal government. Let's talk about it real quick. Here's the first article right here from CNBC. Credit Suisse shares tank after Saudi backer rules out further assistance. Now, that doesn't seem as if that has to do with Silicon Valley Bank, Signature Bank, First Republic, all these other banks that went belly up in America. That doesn't equal out as to why this would be, or Credit Suisse would be affected by what's going on here, right? Okay, so take a look at this. Credit Suisse biggest backer, Saudi National Bank, has said it won't provide further financial help for the bank. So automatically, we already know that Credit Suisse has issues. They got problems. They've already been in this financial position to where they're trying to show up and stay viable. So for a Saudi bank to issue out and say, look, we've already got a stake in this company. We've been giving you all money and it's not working out. That could be one scenario. And now they're to the point to say, look, we're not going to continue to bleed money in a establishment or business or financial institution that we know eventually is going to collapse. We're not going to get anything in return. That could be one thing. Further down the article, they're the top investor for this bank. So you have a outside entity, Saudi Arabia, who is the top investor of a European bank of Switzerland. Top investor in the embattled Swiss bank said it would not be able to provide any more cash due to regulatory restrictions. Now, this article doesn't break down what regulatory restriction it is talking about. Keep that in mind. Going down further. Now, after the European markets closed, Swiss regulators said that Credit Suisse currently meets capital and liquidity requirements and that the Swiss National Bank will provide additional liquidity if necessary. Now, come on. That is something that is not matching up. If Credit Suisse currently meets the liquidity requirements and the capital requirements, then why would you come out and state that you will still give them more money if needed? So rather than the Saudi bank providing capital for Credit Suisse, the Swiss bank is going to come through and prop up this market now. Okay, so pretty much what they're doing is just passing the buck. They're passing the problem, and now it's a problem for the Swiss National Bank. Okay, now Credit Suisse largest investor, the Saudi National Bank, said it could not provide the Swiss bank with any further financial assistance. Like I said, they're noticing that Credit Suisse has problems and it's not panning out. It's not working. Now, if you see that an investment is not favoring your original capital injection, why would you want to continue to put money towards it if you can see no light at the end of the tunnel? We cannot, because we will go above 10%. It's a regulatory issue. I guess maybe outside entities can only invest and own 10% of a particular company in Switzerland. Could that be what he's talking about? This is what Amar al-Kandari told Reuters yesterday. However, he added that Saudi National Bank is happy with Credit Suisse transformation plan and suggested the bank was unlikely to need extra money. You see all the contradictions here? Because early up in the article, it read that the Swiss National Bank will provide additional liquidity if necessary. Now, we had this the Saudi National Bank chairman just say that the bank is unlikely to need extra money. See, a lot of these articles, a lot of things that people in prominent roles, when they come out and do interviews, they try to quell any nervousness in the markets. That's their whole function when they know that the business has problems, but rather than extenuate those problems, they try to calm it down a little bit. Now take a look at this. Down here at the bottom, the Saudi National Bank took a 9.9% stake in Credit Suisse just last year as part of the Swiss lender's 4.2 capital raise. So just last year, Credit Suisse needed $4.2 billion to fund a massive strategic overhaul aimed at improving investment bank performance and addressing a litany of risk and compliance failures. That's just last year. So here it is this year, 2023, and they still need money. It doesn't look good for Credit Suisse. Now, Credit Suisse chairman Axel Lehmann declined to comment on whether his firm would need any sort of government assistance in the future. Again, we're seeing that the Swiss National Bank saying that Credit Suisse won't need additional money. Then you have the Saudi National Bank also saying the same thing. But then you get to the chairman of Credit Suisse himself. When asked, he didn't want to even talk about it. He declined to comment. When asked if he would rule out some kind of assistance, Lehman answered, "That's not the topic." He completely diverted away from the question that was asked to him. He said, "No, I'm not even going to answer that question." We are regulated. We have strong capital ratios, very strong balance sheet. We are all hands on deck. So that's not the topic whatsoever. You see how he skated around that? Rather than being forthright and honest, he said that that's not the topic. So when somebody tries to divert away from the actual question, that's a red flag. Now, this is what I'm talking about when you have people in prominent roles like chairmen, CEOs, CFOs, who sits at the top and they know that they're in a very precarious situation. This is what the CEO of Silicon Valley Bank said before it went under. He told the investors to stay calm, don't panic, right before their bank collapsed. You have the same thing here. Everything is cool. Everyone is telling you that Credit Suisse won't need any additional money. They can meet all liquidity and capital raise requirements. No problems, no issues, right? But then, just like the Silicon Valley Bank CEO told investors, don't worry, relax, everything is cool. That's the same situation we're getting with Credit Suisse. And then you come around and see that in the grand scheme of things, the central bank gave them cash, more inflows of cash to stem up their bank. But these other articles earlier said that they won't need it. Then why would the AP come out with an article with the title "Credit Suisse shares soar after central bank aid announced"? Take a look at this. The shares of Credit Suisse soared 30% on Thursday after it announced it would move to shore up its financing by borrowing up to nearly $54 billion from the Swiss central bank. They just said that they don't need the money. They said that they met all requirements. All of these individuals connected to the situation just said earlier that they don't need the money. But then the next thing you see, they're getting an inflow of $54 billion from the Swiss central bank. Now, where is the central bank going to get $54 billion from? Oh, they're printing it. Now, Credit Suisse is Switzerland's second largest commercial bank, which brings it into the category of too big to fail. Credit Suisse has its hands in so many other pots across the world that if this goes under, it's going to really cause reverberations across the global economy. That's why so many entities, whether locally within Switzerland, the European Union, the central bank, even outside of the country, Saudi Arabia, They're trying to keep this afloat, is what they're trying to tell us. This is what's going on. Now, Credit Suisse, which was beset by problems long before the U.S. bank failures, see, this has been a long problem, long issue at Credit Suisse. They're trying to stem it. They're trying to survive. They're trying to keep it afloat. It's been a long problem. They said Thursday that it would exercise an option to borrow up to 50 billion francs or $53.7 billion from the Swiss National Bank. Y'all just said earlier that you didn't need it. Now, before the chaos erupted, European Central Bank head Christine Lagarde had said it was very likely, in quotes, that the bank would make a large half percentage point rate increase to tackle stubbornly high inflation. Don't like that neither. That's not good for the bank. The Saudi bank is seeking to avoid regulations that kick in with a stake above 10%, having invested some 1.5 billion Swiss francs to acquire a holding just under that threshold. Okay. Now, Credit Suisse is a much bigger concern for the global economy now than what the mid-sized U.S. banks is currently going through and collapsing. This is what Andrew Cunningham is saying. Credit Suisse is not just a Swiss problem, but a global one. Like I said, this is a long, drawn-out problem that they're trying to fix, and this is not look like a local fix. The world is trying to fix Credit Suisse. They're trying to keep it afloat. He noted, however, that the bank's problems were well known, so do not come as a complete shock to either investors or policymakers. Then why would the market go down 30% in one day if this has been well known? Because something is changing. They're noticing that it's not working. The problems once more raise the question about whether this is the beginning of a global crisis or just another idiosyncratic case. This is what Andrew is noting. Is this the beginning of a global crisis? You can only throw so much cash at a failing business. Credit Suisse was widely seen as the weakest link, and now it's back up in the news again. Now it's getting more cash injections from the central bank. But it's not the only bank which has struggled with weak profitability in recent years, okay? Now, in an annual report released Tuesday, okay, take a look at this. Credit Suisse said that customer deposits fell 41%, or by 159.6 billion francs, $172.1 billion at the end of last year compared to a year earlier. People are taking the money out. That's why they need cash. They see the writings on the wall as well. Depositors is taking money out their bank, and it doesn't look like it's a lot. It doesn't look like it's just a minimal amount. We have 41% deposit fell. Again, it's not good. You take a look at the chart for Credit Suisse. Look at this. Charts don't lie. This is a failing bank. And what we have here is a price chart that clearly tells us that the market knows that Credit Suisse is already a failed bank, but it's too big to fail. So they've been inundating this business with money and cash to keep it afloat. And they're just passing it like it's a hot potato. Saudi Arabia eventually is going to take their 10% stake out of this bank because it's not going to recoup any profits from their investment. So now it's going to be a problem for the central bank in Switzerland. Now, I did a tweet yesterday, right? Just trying to think of another scenario that could possibly cause Saudi National Bank to reduce or say, look, I'm not going to give you guys any more money. All right. I gave you one scenario. Here's the second one. Think about this. The Chinese brokered a deal with Saudi Arabia and Iran, right? Without U.S. assistance. They did some diplomacy between two countries who are rivals, and they made an agreement without United States help. That was on March the 10th when that was reported. Okay. And then March the 15th, Saudi Arabia pulled support for Credit Suisse. Is there something that could possibly be in this deal between Saudi Arabia, Iran, and China that would make Saudi Arabia tell Credit Suisse, we won't be able to give you guys any more money? Just think about it. We don't know the intricacies of these deals, of these regulations. They're just giving us the broad spectrum as to why they're moving the way that they're moving. One thing that we need to come in contact with ourselves is that we need to go deeper than what is actually on the surface. So yeah, it could be a regulatory issue that Saudi Arabia cannot own no more than 10% of any foreign company. It could be. Or it could be this, to where this new agreement that Saudi Arabia has made with Iran and China, that there's a statement in this agreement that says you will have to reduce your funding in any European Union bank or company or business and move it elsewhere. Just something to think about. Now, I'm done. The situation doesn't look good for Credit Suisse, and it's going to be a problem until either it fails or the Central Bank of Switzerland continues to inject it with money and cash. But as long as people take their money out the bank, there's nothing else that the bank can do. The bank needs depositors' money in order to make money. I did a price prediction in Credit Suisse going all the way back on October the 19th. Here it is. Okay, because I am a channel that is fully transparent. And at that particular moment, I played some strength into the market in Credit Suisse. Now, I wasn't massively bullish, right? I wasn't looking for the market to run back up to $8 to $10. I simply had an ultimate TP price at $5.20. Market in Credit Suisse on October 25th, 2022, only ran up to $4.90. That's it. Market completely fell down from there. So it didn't pan out the way that I expected it to go. And given the situation today, there's nothing else here. Nothing. And I want to tell you that the volume that came into the market in Credit Suisse has really hurt the market. Look at the volume that came in. Nothing has been as huge of a volume than yesterday. So yeah, there's definitely been some big banks, big institution hedge funds trying to get about, and then others trying to keep it propped. Now, I'm done. Go ahead and give me your thoughts about this situation. Do you think Credit Suisse is going to ultimately survive? Continually get bailouts from businesses and central banks? Let me know. Make sure you maintain profitability. And as always, trade different.